From the financial centers of the world, this is Bloomberg Markets with Alix Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day on this Monday, May 23rd. Here are the top market stories we're following for you at the hour. Buy bear, hello rally. The stocks shake off 7 straight weeks of losses as China unveils a plan to support the economy and President Biden hints at possible tariff relief. And broadening, Broadcom, the semi-giant, sets its sights on VMware after its failed deal for Qualcomm years ago. The stock is down by about 5% in the market. And Davos and the path to deglobalization. World leaders take Davos by storm and tackle the effects of a deglobalized world. We're going to speak to C-suite executives all throughout the next 2 hours. From New York, I'm Alix Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. Guy, it feels like we all forgot that we hit a bear market at some point on Friday.
Yeah, it didn't last long, and we rallied through it. And I think there was some options action in there as well. But nevertheless, you're right. We seem to have forgotten. We seem to have moved on from it relatively quickly. I still think the scars are going to take a while to heal, and I'm not sure we're done yet. So I think there's a kind of pause maybe as everybody focuses on maybe some good news. If we get another 8-week down, that's 8 weeks in a row. That's a record. That's never happened before. So we're kind of at the outer edges of what markets do right now. I think the question around this is going to be a Davos-themed week. It's definitely going to be a Davos-themed show. And I think the issue of globalization is really front and center here. And I think it goes to why markets are up a little bit as well today. The president's comments on tariffs, I thought, Alex, were really important. If he is going to ease up those, and Joseph Stiglitz was talking about this in Davos, that's going to help on the supply side as well. And it was interesting to hear what he said about the fact that you can't solve this problem with interest rate rises. You can only solve this problem with supply side reform, and that's what basically he was talking about. So I think we're kind of maybe looking at things from a different point of view today.
Yeah, and I think that that's also important because even if things, say, are fixed on the tariff front overnight, for example, will all of a sudden supply come, shipped into the U.S.? I have a lot of doubts about how quickly that can get fixed and how quickly then that winds up helping the Fed.
I agree, but it's interesting that people are focusing on the tariffs rather than the Taiwan comments, which I think are much more positive for the markets. I think the Taiwan comments, if you take them at face value, are a little bit of a risk to global security. Anyway, let's talk about it a little bit more. We need to bring in a few smarter voices. Well, obviously, Alice is smart, me less so. President Biden, still in Asia. While he was there, as I just alluded to, he did signal that he's going to reconsider those Chinese tariffs imposed by the Trump administration.
I'm talking with the Secretary when we get home. I am considering it. We did not impose any of those tariffs. They're imposed by the last administration, and they're under consideration.
It would seem one way of maybe resolving some of the issues that we're facing right now. Global business leaders in Davos, Switzerland, World Economic Forum underway. Yes, there are cows rather than snow in the background this year. It's all rather green. But globalization or deglobalization, definitely the main central theme. So our question of the day, how far can deglobalization go? Michael McKee, Bloomberg's international economics and policy correspondent, joining us to discuss, as is AMH, Anne-Marie Hordern, Bloomberg's Washington correspondent, joining us from D.C. Anne-Marie, let's talk a little bit about those Biden comments on tariffs. Is this a recognition that we have a major supply side problem for the U.S. economy? And one of the ways of resolving that would be to reduce those tariffs. This is, effectively signaling that globalization is still important.
Well, Guy, I think the first thing is that when you look at the supply side, we're talking about inflation, right? And this is their biggest domestic hurdle right now. This is what American families are dealing with, and American families will be heading to the polls soon for the midterm elections. But this also isn't news. The president said this a few weeks ago, saying that this was under discussion. Now he's saying he's going to be sitting down with Treasury Secretary Janet Yellen to discuss it. He also wanted to make clear to that audience that we did not impose these tariffs. These are Trump-era tariffs, and they've become under pressure because inflation is so high, and you have the likes of the Peterson Institute saying if you remove those tariffs, 1.4 percentage points could be shaved off inflation. But potentially a big question the administration is going to be asking is how much is going to actually hit the end consumer, as they are under pressure from the likes of Chamber of Commerce and some economists and lawyers to remove those tariffs. But another part of the administration, Guy, will also be asking, we do have midterm elections in November. If they remove these tariffs, are they seen as soft on China? And that is something this administration does not want to be seen as.
So, Mike, on the economic front, though, let's pretend that it does happen and we do get some kind of tariff easing. Like, how quickly does that feed in to inflation? Like, how does that help the Fed?
Doesn't feed in very quickly at all. The Peterson Institute's study was over the course of a year, and they think that once the tariffs are removed, then you could see about a 0.3% decrease in inflation on a monthly basis. The problem is that many contracts for imports are already signed. We're almost getting to the season, however, when everybody starts ordering for the holidays, and so it could have an effect by the end of the year. That doesn't help you with your November 1st Tuesday problem for the Democratic Party. And the other issue is, and I'm sure they're having a grand old time arguing about this at the bars in Davos, is does it really affect inflation? There are all kinds of studies that suggest either a big impact or not very much impact at all. And as far as the president sitting down with Janet Yellen, he really needs to sit down with Catherine Tai, because the U.S. trade representative has been very much opposed to removing the tariffs. And she argues the Peterson Institute study is somewhere between an interesting academic exercise and a fantasy.
Mike, why? Why wouldn't it? Sorry, that's amazing. Why is it a fantasy? Why would it be having such little effect in reality? Americans are dealing with inflation right now. If you raise the cost of imported goods, why wouldn't reducing the effect of that reduce inflation?
It would a little bit over a period of time, but a lot of it is absorbed by middlemen in between the producer, the exporter, and the importer. So not everything makes it through. And plus, Biden has been talking about $335 billion worth of tariff reductions. That's about 25% of the tariffs that they put on. So it isn't a huge amount of money, and it has more symbolic value, perhaps, than it does actual economic value.
Yeah, not to mention the fact that we're already seeing sort of reshoring, onshoring move from companies to they're not vulnerable to the likes of China. And I have to wonder how much that's really going to change also. Hey, Anne Marie, a guy alluded to this before, but President Biden's comments on Taiwan, it feels like that's being pushed aside in favor of the tariff conversation. But that had strong repercussions from the official White House and sort of what they put out against it. Can you talk me through a little bit about that?
So this is the fourth time the White House, Biden himself, or his aides have had to come out after Biden made a comment about Taiwan to then walk it back. So one White House official said the president did say they are approaching this as taking in consideration, and they still maintain this one China policy. But the president was asked about whether or not they would come to the defense of Taiwan. And his remarks were, yes, it's a commitment we made. And he said the idea that they could be taken by force, just taken by force, is just not appropriate. It'll disclose the entire region to be another action similar to what happened to Ukraine. I'm reading off his statement because, these words are very tricky. And the White House has come out and saying he's talking about not sending U.S. military troops, but sending military aid. But this does obviously put the backs up of Chinese officials, because this is something they do not want to hear. And we've been here before with this president.
I appreciate that we've been here before with the president, but isn't that, if you think about the comments on tariffs, and you made the correct comment a little bit earlier on, suggesting that there is a danger that the president will be seen in the midterms as being weak on China, he can balance that out by saying, look at my comments on Taiwan. Doesn't one go hand in hand? Isn't this actually, in some ways, and I appreciate that the White House officials are walking it back, but in some ways, isn't this smart politics from his point of view? He's able to walk back the tariffs. He's able, and I appreciate what Mike had to say about what what Tai said about this. Not Janet Yellen, Tai.
Catherine Tai.
And Catherine, yeah. But if he can put himself in a position where he says, look at my comments on Taiwan, isn't he in a better political position?
Right, and that's something the Republicans certainly want to see, right? A very tough defender of Taiwan and that Taiwanese relationship with the United States. I mean, a few people have messaged me asking, do you think the president was being very ambiguous, meaning, okay, the White House walks it back, but a number of times he has come and said the U.S. will defend Taiwan, and that is being incredibly tough on Beijing, potentially at the same time as they weigh these tariffs. We just don't know, Guy, if they go hand in hand, but it's an excellent point.
All right, well, uncertainty, whatever, we're still having stocks up here. The S&P up by 0.3%. NASDAQ 100, though, still a little bit lower. Go figure. Guys, thanks a lot. Bloomberg's Michael McKee and Emery Hordern. Great to catch up with you guys on this Monday. So coming up, we're going to pose that question to Julie Beal, portfolio manager at Kane Anderson Rudnick. She'll be joining us next about where she thinks we are in the deglobalization cycle. This is Bloomberg.
We are looking into the 2022 as a difficult year for especially developing countries under a high level of debt. When your cost of servicing your debt jump up and you are in a very tight fiscal position, of course, this is the time when the IMF has to step up, and we will do.
That was IMF Managing Director Kristalina Georgieva earlier in Davos, Switzerland at the World Economic Forum, where deglobalization is definitely a central theme, which leads us to our question of the day. How far can that deglobalization trend go? I want to bring in Julie Beal, a portfolio manager at Kane Anderson Rudnick. Hey, Julie, you have to invest longer term, right? So how does globalization impact? Where are we in that?
Well, I think right now, globalization or deglobalization really is a great talking point for a lot of politicians. And we've seen the challenges of our hyperglobalization in the sense that our supply chains are very rigid and they're built for being low cost, but they're not necessarily built for flexibility. And, we've seen the downsides of that. But being able to wholesale move and re-onshore is a really challenging, slow process. And the thing is there are reasons why globalization happens, right? Some countries are better at producing certain things, right? I am not buying my romance novels from Germany, right? But I love their cars. So it's just a function of being able to amass the right quantities of inventory in places where it makes the most sense. So I think longer term, we'll see some movement to onshore where it makes sense, high value goods. You see semiconductors coming back to the US. But generally speaking, I don't think there's going to be a wholesale change.
I'm genuinely just Googling German romantic novels now. There are a few out there.
They're probably a little depressing, but
Well, no, I haven't read them. Certainly not in German. So I'll park that one. But they do exist, is my point, is what I'm trying to say. Julie, the point about deglobalization is, though, that it is likely to be inflationary. If you talk about kind of comparative advantage, that comparative advantage leads to lower cost and therefore lower inflation rates going forward. If we reverse that, it's going to mean higher inflation. That's what Stiglitz is talking about in Davos. He's talking about the fact that we're trying to fight the war the wrong way right now. We have a supply side problem, but the Fed's raising rates. The two don't compute. The two don't go together. So if we're using the wrong tools right now, what is going to be the implication of that?
Well, I think right now inflation is a near-term problem, right? And being able to completely wholesale re-onshore your supply, that's a multi-year process, right? Intel's fab in the US is going to take years to build, right? So I think the talk of deglobalization is really more so a political point of we need to move to be more flexible and have more good jobs onshore, right? But the real fight with inflation is happening kind of at the monetary level. And it's not so much about where we are in deglobalization. I don't actually think they're that super related because their time horizons are so different.
well, it's a fair point. And also, if we got immediate relief, would companies just use that to help their margins and not necessarily pass that on to their consumers, for likes of Target and Walmart? So,
Exactly.
So with that in mind, and we look at a market that had a really terrible 7 weeks, particularly last week on that Thursday was really brutal, and then today we're up by 0.7%. And I just wonder, is the worst over, or are we going to be in a no man's land?
Well, I think the level of volatility indicates that we're still probably not settled into a bottom, right? I mean, this is probably one of the most emotional markets we've seen in a long time. I mean, it's worse than my 4-year-old toddler. I mean, it's just all over the place. And, if you think about what we're doing, right, every day we're trying to price companies, right? These companies' fundamentals are not moving 20 to 30% in the span of months, right? So that really indicates that this is about investor emotion, investor spirits. And when we have this level of volatility, we're not going to get to a place where we really are genuinely completely oversold, right? We have to exhaust. Everyone has to say, I am done with this market. And we're not there yet because we're seeing so much money kind of flow back in when we get these like nice short little rallies. And I just don't think we're quite there yet.
Julie, you do a lot of granular work on companies. What are you getting from those companies and the research you're doing in terms of where we are with the consumer? I've listened to a number of people in Davos today, particularly from the banking world, talking about the fact that the consumer is still in great shape, which kind of goes contrary to some of the data we've seen lately. What is your sense of where we are? Because if the consumer's still in great shape, then we've still got a way to go with this.
I think that's absolutely right. I think if you have a strong consumer, the economy can really chug along for a good long time. The sentiment is really bad, but generally speaking, sentiment isn't always the best indicator of the consumer's health. But I do think at a certain point, these gas prices start to be really meaningful. We're starting to have to go back into work, whether we like it or not. And I think generally speaking, with all the bad news about inflation, that really causes people to reevaluate how they're spending their money. So I think we'll have a nice boost of people just traveling because they have so much cabin fever over the summer. And then we will really have a retrenchment. And I think you could see very soft back to school numbers. I think you could see a tough holiday season. And that would be really difficult for a lot of the US economy to shoulder.
Apparently Goethe was a romantic as well, Julie. So we've offended a few Germans today. We're getting a few comments. No. I think collective responsibility here. Julie, thank you very much indeed. Greatly appreciated. Julie Beale of Kane Anderson Rudnick. Thank you very much indeed. Swiss romantic novelists, maybe we should talk about those as well. Coming up, the Saint-Gobain CEO is going to be joining us from Davos. Benoit Bazin is going to be speaking to the team there. We'll get his take on supply chains as well. Obviously, the construction sector is an interesting place right now. Material prices going up, labour prices going up. We'll get Benoit's take on all of that. This is Bloomberg.
Raising interest rates is not going to solve the problem of inflation. It's not going to create more food. It's going to make it more difficult because you aren't going to be able to make the investment. What you do is you have supply-side interventions.
That was, of course, Professor Stiglitz, Nobel Prize-winning economist and Columbia University professor, speaking to the team in Davos a little bit earlier on. Let's get back to the Swiss Alps. Joining us now, Bloomberg's Haslinda Armin, with the CEO of Saint-Gobain. Haslinda.
Well, Guy, you said it. It's not just about surging inflation prices. It's also about those higher rates and, of course, expectations of a slowdown in the global economy, although we've seen a pushback from Kristalina Georgieva herself that she's not factoring that in at this point in time. Let's get perspective from a company which is one of the largest industrial companies in France. Of course, Benoit Bazin is Saint-Gobain CEO. Benoit, good to have you with us. What assumptions are you making about inflation? And at this point in time, that seems to be the new normal. Are you having to pass on all the costs to your consumers?
Yes, clearly we live in a world with higher inflation. Actually, a vast majority of that comes from energy. How do we cope with that? I would say first priority for our customers is availability of building materials on the job sites, making sure that with all the disruption on the supply chain, they get the building materials, so good service. And the second point is that we are the leader worldwide on light and sustainable construction. So we provide solutions for energy efficiency. When you provide a lot of solutions, value-added products to your customers, it does help the pricing power. And yes, last year we did pass the higher inflation on raw materials to our customers. This year again, we are on double-digit price increase in the first quarter. We pass it to our customers, but priority is availability, good service, good solutions, value added for our customers.
All against the backdrop of expectations of a slowdown in the economy. Are you looking at demand destruction? Are you looking at perhaps, companies canceling on projects?
We don't see that. That has been the number one question from investors over the last 2 months, demand destruction. I keep saying that we have a huge backlog of renovation in Europe. Why? Because energy efficiency is, of course, important for carbon neutrality. We are here in Davos to talk about that. It's very important for the purchasing power of households. And now it's even more important for the geopolitics in terms of getting our independence and sovereignty right. So there is a perfect alignment on jobs for renovation towards energy efficiency. So large backlog of orders in Europe on renovation, a lot of accumulated savings from households over the last 2-3 years. Also new habits, work from home, you need to renovate your attics, change your garage for a work from home type of office. If I take the other countries, in the US, we have a good level of housing starts, still a good demand. We are up 40% in India, for instance, in the first quarter. So it varies country by country, but overall, no, I don't see a recession coming. We might have a bit of question mark on new build in Europe in 2023, but renovation for us is 50% of our sales and is strong, and we need to triple the renovation rate in Europe for the next year. So I'm very confident about that way forward.
Benoit, not all your shareholders are happy with how you're doing it. In fact, your activist shareholder, Bluebell, reportedly is pushing for you to reorganize your business and also to perhaps replace your chairman. I mean, how are you responding to all of that?
Well, first, we value all the insight and perspective from all investors, big or small, and we are open to any constructive dialogue. What we are doing is a country-by-country, very pragmatic approach. So I'm not dogmatic. I take a country-by-country approach to create value, to maximize the value we create for Saint-Gobain, being pulled by very promising markets such as energy efficiency renovation, light and new sustainable construction.
So in terms of shareholder returns, what can be expected?
Oh, we have done a lot. Last year was a record-breaking year for Saint-Gobain, thanks to the deep, successful transformation we have done over the last 3 years, very pragmatic by country. So the largest organic growth in the sector, the largest margin expansion in the sector, and also ROC, return on capital employed, above average, above 15%. So we keep rolling out a successful strategy, and I can tell you our large investors are very happy about the job with the team and the energies that we have developed over the last 3 years, and still a lot more to come in the next years. I'm very confident.
All right, we're going to look forward to that. Benoit, thank you so much for that. Benoit Bazin, Saint-Gobain CEO. Guy, we're handing it back to you.
Yeah, we'll be back very shortly with you there in Davos. Haslinda, thank you very much indeed, the CEO of Saint-Gobain. A few comments coming through from Andrew Bailey. He's just releasing the text of a speech that he's about to deliver. Tightening must take into account the income shock. The UK has a tight labour market, not rapid demand gains. The bank is prepared to raise rates again if needed. What are we going to do next? As I say, back to Davos. Pat Gelsinger, Intel CEO, joining the team from the World Economic Forum up there in the Swiss Alps. We're going to be talking about chip shortages, what is happening with the supply chain story. That conversation coming up next. This is Bloomberg.
A lot has changed since the beginning of the year. I think the biggest change has been discounted tightening by central banks, particularly the Fed. And we have seen that flow through clearly to the bond markets. And we have seen the equity decline so far, largely a function of the change in discount rates. You haven't seen a major change in expected earnings growth. And so that to us is the thing we're watching. If this is a head fake or continuing, that would be the shoe to drop.
That was Rebecca Patterson, Chief Investment Strategist at Bridgewater, speaking earlier in Davos. And we are an hour into trading on the U.S. trading session. I don't know, it's confusion. NASDAQ 100 can't make up its mind where it's going. Bloomberg's Abigail Doolittle is tracking some of those moves. Hey, Abigail.
Hey, Alex. Well, yeah, it is another unpredictable day. We just moments ago had the NASDAQ 100 down slightly after being up big time in the pre-market, now back up. And the S&P 500 moving closer to its pre-market highs. Right now up more than 1%. The NASDAQ 100 up about 0.3%, really outperforming the banks, up 3.4%, the best day in about 5 days. Helping out, of course, we have yields rising, up about 4 basis points, the 10-year yield, as bonds sell off a little bit on this risk-on tone. But we also have commentary out of J.P. Morgan. They've raised the net interest income outlook. That has all of the big banks up 4 or 5%. On the year, though, it's a different story. Despite the fact that we have this historic backup for yields, you have banks down pretty sharply on the year, down about 25% here for some. But today you can see this little bit of a rise. So maybe this net interest income guidance rise for J.P. Morgan will help out the banks, especially, again, we do have yields moving higher. As for some of the individual movers elsewhere, it is, of course, a M&A Monday. Take a look at the shares of VMware, absolutely soaring up 19% on the news that Broadcom Bloomberg learned earlier that Broadcom is considering a bid for VMware. Broadcom, of course, a chip maker. They've been moving more into software. VMware, a cloud maker, a cloud software company. So another bid for diversification. It would be a greater than $50 billion deal. So a real blockbuster. And of course, VMware is one of Michael Dell's companies. And you can see Dell Technologies up 2.4%. As for the market action on the day, we of course had that rebound Friday. It almost felt like after the S&P 500 hit that technical bear market briefly of down 20%, it cleared the way maybe for some near-term dip buying. We'll see, because it's felt like that for a little while and it hasn't really come together. But one thing that could be attractive for some of the dip buyers who have some real courage is valuation. The S&P 500 forward PE at 16.4 times. That is slightly below the 10-year average. You can see, though, it's still above that low that we saw back in 2020 and then in that 2018 brief correction mini bear market. Relative to 2008, which is not shown here, Guy, in 2008 and 2009, the S&P 500 forward PE went below 10 times. It was actually a single-digit deep value. We're nowhere close to there right now. But nonetheless, this is attractive here.
Abigail, great stuff. Thank you very much indeed. Intel is down 19% year to date. Pat Gelsinger is the CEO. He's up a mountain right now in Davos. Let's listen to a conversation with him.
Well, we welcome now our Bloomberg television audience and Bloomberg radio listeners. Joining me now at the World Economic Forum in Davos is Intel CEO Pat Gelsinger. Pat, good to have you with us.
Great to be with you, Haslinda.
The world has been preoccupied with supply chain disruptions as well as chip shortages. I mean, analysts out there saying perhaps there is light at the end of the tunnel. They say, you know what, maybe there'll be an easing by the second half of this year, but you're not so upbeat. You say not until perhaps 2024.
Yeah, no, we definitely think that the supply-demand balance is 2024. And, a year ago I said 2023. Since then, we've seen a number of equipment supply chains move out. So our equipment coming into the fabs that we're building, that has moved out. So overall, 2024 until we start to see a reasonable balancing of semiconductor supply chain.
So will it get worse from here before it gets better? Because when you take a look at the ports in China, for instance, we're talking about 50, 60 ships just waiting to unload. And of course, that's causing a lot of headaches.
Oh, yeah, the supply chain issues that we've seen in China, but it comes on the back of many other supply chain issues. So we're already sort of beaten down, and so we have to work through it. And maybe the softening of the economy, a little bit of consumer softness gives us just a little bit of breath. But we're still out till 2024, and obviously the Shanghai ports have created a bit more turbulence that we're managing through near term.
We talk about a slowdown, in fact, a global slowdown, although we've seen a pushback from Kristalina Georgieva saying we're not looking at a global recession, but definitely a slowdown. Would that mean demand destruction? What assumptions are you making?
Well, we definitely see a bit of softening on the consumer side. Right?
How much softening? I mean, can you give a number to that?
As you saw in our earnings, we saw, there was a meaningful, several, a number of percentage points softer there. We originally were expecting the PC industry to be up a couple of points this year. Now it's sort of flattish, maybe down 1 point. So, a meaningful swing. But on the business side, the enterprise and commercial side, no change. Right, continuing to have real strength in those areas of the market. I think with inflation concerns, tightening of monetary policy, these continuing supply chain challenges, things are probably going to be a little bit choppy for a couple of quarters.
You're also reviewing where you produce your chips. In fact, you're making Europe as well as the U.S. a priority, and perhaps that message is resonating even more given what we're seeing in China. How is that coming along?
Well, we are all in on the rebuilding on what we've called the geographically balanced resilient supply chain, where this industry was 80% in U.S. and Europe 30 years ago. Now it's 80% manufactured in Asia. What happened? And it was never, as I was in Washington last week, and I joked to some of the congressional leaders, we never voted to get rid of this industry, but those countries voted to get this industry, and they put strong packages in place to attract this industry there. And now we see that, we are way too dependent on too few places in the world. And Haslinda, what aspect of your life is not becoming more digital? Everything's becoming digital, right? My consumer, my healthcare, my transportation, how I work, how I live. and everything digital runs on semiconductors. As I say, where the oil reserves are define geopolitics for the last 5 decades. Where the fabs are is more important for the next several decades. Let's build them where we want them and do it in a way that we have more resilience to the supply chain.
It is all great that you want to make the US and Europe a priority, but it's also about scaling and scaling quickly. How soon can you get there?
Well, we've announced the Ohio site, expansions in Arizona. In Europe, we announced our expansion in Germany, new research in France, expansions continuing in Ireland. And what we're really now anxious to see is that the U.S. and the EU CHIPS Act get completed that allows us to make those good economic investments. Because part of the challenge is that we're competing now with countries that have very actively incented those investments in Asia. And these investments, they have to be competitive worldwide, or I can't compete for the worldwide market. So, and that's what we're looking for, the EU leaders as well as the U.S. Congressional leaders, get these things done so we can go faster.
Just for our radio listeners, we're speaking to Pat Gelsinger, Intel CEO here in Davos. Pat, I mean, we talk about how we want to ramp up that production in the U.S. and Europe, but what kind of government support are you seeing, are you getting? And is it enough?
Well, the U.S. CHIPS Act, $52 billion, the European CHIPS Act, 45 billion euros. And as we've looked at those programs and we've helped to shape them, they make us competitive in the world. We feel very good that these are very good steps forward. And it's against what I call the moonshot. And by the end of the decade, our objective is that we go from 80-20, 80% Asia, 20% U.S. and Europe, to 50-50. Right, 30% U.S., 20% in Europe, 50% in Asia. That is the goal that we are driving these for. And we think these are great steps forward. And if they are being successful, we can drive toward that 2030 goal of 50-50.
We've heard from Gina Raimondo urging for manufacturing data. Is that a game changer? I mean, how will it help solve the supply chain disruptions?
She's argued for and has, put some steps in place to help with supply chain transparency. And, we're supportive of the general idea of more visibility there. But I say, I don't think that's the solution. I think that helps a bit, but we think fundamentally we have to build more resilient supply chains. We have to do that with the fabs, and then we have to attract more of the other aspects of the system supply chain, materials, the gases and others that go into it. We need balance across U.S., Europe, and Asia. That is the fundamental answer to accomplishing what we see as this resilient supply chain of the future.
Pat, I'd like your reaction to what we reported on Bloomberg TV today, that perhaps Broadcom is looking at acquiring VMware. Your thoughts on that? Will this be the start of more consolidation within the industry?
Well, I woke up to the news a little bit startled as well, like everybody else. I had put 8 years of my life, my soul, into VMware, so a bit startled when reading that. And I would say, hey, if it helps VMware be a more compelling, innovative growth story, then it's good. If not, then it's not good. And to me, it really is, they play a certain place in the ecosystem of the industry, hybrid cloud strategy. That's super important for the future, and I want to make sure that they continue to do that for a long time to come.
On the surface right now, is it good? Yeah, Broadcom acquiring VMware. Will it be good? I mean, what's your own take? I mean, you have insight knowledge.
Sort of mixed, in the current thinking. And obviously, it was surprising news today. And I'm, like I say, we have to make sure VMware is a great innovation engine for the future.
Do you see further consolidation within the industry? I mean, we're seeing an uptick in terms of tech consolidation, I think in excess of 40% for the year already.
Yeah, well, obviously with the correction and multiples that we've seen, I think somewhat we were overheated, right? With some of these high multiple stocks, and as that comes back down to earth a little bit, yeah, I think there will be consolidation. We've done several acquisitions this year, and I don't think any of that's bad in that sense, because there's an extraordinary flow of new IPOs and new offerings into the market. I hope to get my Mobileye IPO done this year as well. So I think it always is this normal cycle of acquisitions, consolidation, and new birth. This is an exciting industry.
Just one final question before we let you go. Lots of headwinds for companies, for governments, inflation, supply chain disruptions. For you, as you look ahead in the next 12 months, what's the biggest one? What's the biggest biggest risk?
Well, I think overall this economic uncertainty, right, creates some of these headwinds with our customers and what they're forecasting. But, I'd say two responses that we're saying. I'm investing for a decade, right? And hey, some near-term up and down, that isn't what we're focused on. We have to go manage the biggest business prudently in the near term, but we are making a 10-year cycle of investment. Also, the core of why we're here at Davos is public-private partnership. Governments and companies coming together to drive industry policy that allows us to compete for the long term, geographically balanced, resilient supply chains.
All right, Pat, great insights. Thank you for joining us. Pat Gelsinger, Intel CEO, right here in Davos. Back to you.
All right, thanks so much. That was Haslinda Amin from Bloomberg with Pat Gelsinger, Intel CEO. Remember, he was the CEO of VMware from 2012 to 2021, so really great to get his insight on that potential deal with Broadcom. All right, coming up, we're going to get the latest on the health of the consumer. Ling Hai, MasterCard International Markets co-president, will be joining us next from Davos. This is Bloomberg.
This is Bloomberg Markets. I'm Ritika Gupta. You're looking at a live shot of the principal room. Coming up, Nancy Tengler, the Lapa Tengler Investment CEO, joining Bloomberg Television, 3:30 p.m. New York time. This is Bloomberg.
All right, let's go right back to Davos, where government leaders, executives, and central bankers are meeting at the World Economic Forum. Bloomberg's Haslinda Amin is there and joins us now with Ling Hai, MasterCard International co-president. Haslinda?
Well, Alex, it is about inflation, and there are expectations out there that, given that costs are being passed down to consumers, they'll be putting a lot more debt on their credit card. Let's get perspective insights from Ling Hai of MasterCard International. Good to have you with us. What are you seeing at MasterCard? Are people putting more debt on credit cards?
Well, first of all, thank you for having me again. So far, we haven't really seen any drop in terms of consumer spend. In fact, the resilience is there. What we are seeing both in Europe and in the US is it's a nice recovery story, basically. People are spending more money. Now, I think a lot of that is driven by the fact that there was government stimulus, there's savings. In fact, the labor market is pretty strong and tight, so you're seeing wage increases as well. So that gives people a lot of room and confidence. The question on inflation is a good one. I think it does create uncertainty down the road. My own hope is it's going to be transitory, because if you think about the impact of inflation, it's just going to create another disproportionate negative impact on the low-income people.
You talk about resilience. The question is for how long? Because data out there suggests that debt will reach a record by summer. And what's the risk then of people being deep in debt?
Yeah. No, so that's exactly what I'm saying. I think the whole thing around inflation is something every government needs to address and take it very seriously. Because of the disproportionate impact on low-income, middle-class people. The rich people don't care about inflation, right? You can afford it. People who can least afford it will be hit really hard on inflation. So it is a concern, it is a worry, but look, I still believe largely the inflationary pressure so far has been caused largely by the supply chain disruptions, and that will get adjusted. The timeline is a bit uncertain. I don't want to get into prediction, but it's something we should watch out for.
The U.S. is a huge market, so is China. It's seeing a slowdown. And when you take a look at the latest data out of China, I mean, we had retail sales slumping, contracting 11%. What are you seeing in terms of, the e-commerce industry, and what is that reflecting?
Yeah. Overall, retail sales is negative for China this year to date. And I think it's largely due to the restrictions and the zero COVID policy. Now, overall, from an e-commerce perspective, it's really interesting. Last year, e-commerce outperformed general retail. It's like 14% versus general retail is about 12.5 or so. This year, e-commerce year to date for China is still positive. It's around 3% versus the negative growth in retail sales overall. So as a proportion of the overall sales, e-commerce continues to outpace, and the percentage is increasing from somewhere around 25% now to 28%.
So what is the outlook? Because for the first time, as President Biden said, that U.S. growth will exceed that of China. in a very, very long time, in decades, in fact. I mean, what's the outlook for China for you, for your business?
That could very well be true, but look, sometimes our spend growth is not necessarily directly correlated with the overall GDP growth because there's a lot of pent-up demand in China, as you know. It's more a function of borders opening. I think people just really haven't been able to travel outside China, and overseas students in the U.S., those who have been able to go overseas, we're actually seeing a recovery in the spend on their credit cards. So we remain actually cautiously optimistic.
Ling Hai, staying with China, you've been, well, MasterCard has been, it's no secret that MasterCard wants to partake in the digital yuan, and you're waiting for approval from regulators. Where are you on that?
Okay, I just want to make one quick correction. We are waiting for approval for a license to conduct domestic switching business. So we're working really closely with the regulator in order to get there. We'll continue to advance our cause there. From a digital yuan perspective, I'm not aware of any approval being given to anybody from a cross-border processing perspective. I think it's still early days. They're conducting a domestic pilot, actually several pilots in major cities. From a cross-border perspective, I think the major issue is going to be merchant acceptance. Will overseas merchants accept the digital yuan? How would that work? How do you create the interoperability? And that's true for both outbound and inbound. So very early days.
Crypto, you're all in. MasterCard is all in, and the CEO has made no comments about saying that it wants to be a part of the crypto space. But given what we saw recently, the fallout in the crypto space, surely that is, I guess, an indication that it is not ready for mass adoption.
Yeah. Well, I think last time we met, we actually talked about this. I continue to think about crypto in two categories, as an investment class and as a digital currency. So as an investment class, like any investment, there's risk, there's volatility you have to deal with, right? So that's what you're seeing right now in the crypto space. Now, we want to support consumer preference for crypto investment. So the buying and the selling of crypto, of course, we're going to support this. We want to be in those flows. From a digital currency, whether this is private stable coins or central bank digital currency, I think it's still early days. Many governments are still looking at this. China is probably further ahead. But when a digital currency is approved, properly sanctioned and approved by a central bank to be used as a legal tender in any country, we are getting our network ready to support that. We have to. We need to be in the flows. We need to be at the table.
It's also whether you can stomach the volatility. Ling Hai, thank you so much for that. Ling Hai joining us here in Davos. Back to you.
That's Linda. Thank you very much indeed. Really fascinating conversation. Bloomberg's Jacinda Armin in Davos with Ling Hai, MasterCard International's co-president. Christine Lagarde saying within the last couple of seconds that a rate hike plan irks some of the ECB who want a faster option. This coming from the fantastic ECB team here at Bloomberg. This is Bloomberg.
Strong economy, big storm clouds. I'm calling them storm clouds because they're storm clouds. They may dissipate. If it was a hurricane, I would tell you that, or a tsunami, like we had in 07 or 08. They may not dissipate, so we're not wishful thinkers. Obviously, we want it to turn out well, but we can handle all of that.
I always love Jamie's glasses when he wears them like that. Jamie Dimon, the JP Morgan CEO, speaking at the firm's Investor Day, said that the US economy remains strong and potential obstacles to growth are not set in stone. They are clouds, storm clouds, admittedly, but nevertheless, they are clouds. The firm also announcing today it is raising its estimate for net interest income, Alix, which is interesting. And it's probably why US banks are trading as strongly as they are today, because it's interesting. So he's had a lot of pushback over the last few days as a result of the plans to spend more money, basically. So he's keeping that cost estimate stable, but he's saying we're going to make more money over here. Hopefully the two may balance each other out when it comes to investors.
What I also find interesting, too, is just what he talked about credit. He said credit looks really good. We've never seen it this good. And they haven't set aside that much for credit. They haven't seen that many credit losses. That's different than what we see in terms of spreads and the concern that, oh, spreads are going to blow out too much, et cetera.
There's been a lot of concern about the consumer over the last few days, yet when you listen to what the bankers are saying today, they're saying really positive things about what is happening with the consumer as well. The European close is coming up next. Coco Agbubloa from SocGen is going to be joining us. We'll get his take on these markets. This is Bloomberg.